we talked a few weeks ago when we were putting this together, and one of the topics that came up was the media. And media is a big factor in real estate and in people's emotions when it comes to real estate. And sometimes the media can be a little bit misleading. So,
Yeah.
with a focus on investors in real estate, how can the media potentially mislead investors about what's actually going on in the markets, um, especially during uncertain economic times where it seems like every other day there's a new news break that, the market's great, the market's bad, the market's really bad. How can a
Yeah.
how can that mislead investors right now?
Yeah. I thought that was a great question. And so the way I look at it is the media is going to present whatever they can to get the most eyeballs, right? It's all about ratings, it's all about eyeballs. And I'm not saying that all of the media outlets are untruthful or, what have you, but here's the thing. They're stirring emotion. And I've learned over the years that people, whether we're talking investors, consumers, they make decisions on emotion and then they'll justify it with logic,
Hmm.
right?
Yeah.
So if the media can stir that emotion, then they're going to align with the media. That's the reason, as a coach, mentor, as a money lender and broker, I always say, be careful who you're taking your advice from. Right? That's true for these gurus. It's true for the media. Align with reputable resources that can educate you on what's really happening in the world. And yes, I think it's important to have that macro view of what's going on so you're not living in a vacuum. But the media is just creating a lot of emotion out there. So let me give you an example. Um, Recently, I've talked to several investors, and these have been scattered nationwide, right? So they're not all in a geographic pocket, but I've talked to several investors and talked about four or five. And they're saying, look, we're not doing anything right now. We're sitting on the sidelines and we're going to wait and see what these interest rates are doing. And my reply is, okay, why are you so worried about that? And their response back to me, I found very interesting. They said, well, what we're reading online is that we could be moving into a recession. What we're reading online is that we still have heavy inflation. What we're reading online is that um, if I go into something right now, I'm not going to get as much for my money. And while some of that stuff is true, um, there's always a counter argument for that, right? For example,
Yeah.
we got spoiled with the 2 to 3% interest rates, right? The interest rates we're seeing today, they're not any worse than they were in the mid 2000s. Okay. So, and the whole concept of inflation, I found that really interesting from somebody. No, inflation's still high. Well, it is, but what's the best hedge against inflation? It's hard assets, particularly real estate, right? But people don't understand the economics behind that, which is why I think, aligning with resources that can educate and bring their financial IQ up to a point where they can make better decisions on their own and they can also call the bluff on some of this media stuff that's out there.
Yeah, I think that's a great point, especially when you talk about the emotional side of it. Because investing, it can be emotional, but when you're doing the due diligence on properties, it really comes down to the numbers. And yes, it may not be the returns that the investors have expected or gotten over the past, say, 10-year cycle we've been in.
Yeah.
And getting a solid return in a hard asset is still gonna provide for those investors as they're looking to put their money to work. So as they are analyzing media, reading things online, how can they continue to make informed decisions about real estate? You kind of mentioned this, I think, about partnering, but how can investors find quality resources to make sure what they're reading is true and they're thinking right?
Well, the one thing that I had to learn as I grew as a real estate investor, and I still practice this advice today, is ask for a track record,
Mm.
right? So you can't really go to CNN and ask for a track record, right? It's not going to happen. But what I mean by that, asking for a track record, is looking to see if they're willing to put out there, the media is starting to put out there these little snippets saying, we review all the content before posting it out. We try to make it newsworthy and as accurate and truthful as possible, right? So there's eyes on it. That's one thing that they could do. The other thing they can do is they can look within their own industry and ask people that have been in that industry longer than they have, who do you trust? Who do you follow? Right? Don't recreate the wheel, but you can get trade publications. And for example, I like the Kiplinger letter. Kiplinger has been a really, really good resource, and they're just neutral. They don't have sides. They're not taking the liberal or conservative side or anything in between. It just is what it is. So I think really fleshing out the resources. Look, you don't have to drown yourself with thousands of resources. You just need one or two that you can rely on within your industry that you're operating in. So for everybody that's listening, I would recommend go check out Kiplinger. They have Kiplinger Finance for the personal side. They have Kiplinger Economic News that'll give you a really good macro view of what's going on in the U.S. And then you can drill down into your local markets. And I think in the local markets, Austin, you provide one of the best tools. You provide the data right out of the MLS. And that's going to be your market overview or days on market report, right? Yeah. So that's your supply and demand. And if you're an investor, over time, when you get those reports, that paints a picture as to what's going on in your market and how you can pivot your business.
Absolutely. Yeah. And I think being able to look at data, looking at historical data as well, and not just historical in terms of 30, 40 years ago, the world was different. But even looking month over month and comparing it with, what the media is saying and seeing how our markets are reacting. Real estate does react a little slower than, say, your equity markets. A news break isn't going to tank a home value right away. But it's something to kind of watch how the media is really affecting the local markets, and partnering with individuals like yourself, either in consulting or on the lending side, and with myself in the real estate side, can be a really valuable resource. So thank you for that information. Sure. On just how the media can, lead people one way or another just based on emotion. And so continuing to work through that for investors is really valuable, and to be able to put on some lenses and really look at the data.
Yeah, definitely. And have you ever noticed that a lot of the stuff out of the media is geared to the negative side of things? They're not talking about the positive side. They're not talking about alternative investments like real estate, where you can beat inflation with real estate, right? It's a great hedge against real estate, against inflation. You're not hearing any of that. That's where we come in to educate, but you're hearing a lot of other negative things, doom and gloom, if you will. And just like this one investor said, I'm not investing because we could be moving into a recession. Well, my response to him was, we could be moving into a recession, but can you invest during a recession? Do you know how to do that? And he said, no, I don't. And I said, well, that's the challenge. It's not that we're going into a recession, because we're going to have those cycles, right? Of peaks and busts. That's part of the economy, but you got to know how to pivot your business so that you can take advantage of those.